Today is Ask Me Anything Friday. The best thing that you can do to get started is typing hashtag Q and then your questions in the chat. I've got Rudes helping me out, saving the questions so I don't miss them. I'm sure that you'll have lots of questions about 4.0, about new strategies, all kinds of good stuff. So let me help you out in any way that I can. Right. This is my way to get back to you on Fridays. So got my coffee going. All right. But I'm so stoked to have everybody here. I'm so stoked to have everybody here. Y'all are the best. Y'all are the best. I got an itty bitty baby cold. Doug Starr says he's loving the new 4.0. Very cool. We're coming at you live from the Batcave. Exactly. Um, hey, David bought some merch yesterday. Very cool. What'd you get, David? What'd you get? Dude, this merch supplier is infinitely better than our old one. And in fact, it's going to get even more better. Mark has said when he gets back, he has hired somebody, I don't know, somebody who like specializes in merch is what he was saying, to help us make even more cool merch, which I'm super stoked about. Steve Mucha says, can I have some money? Well, that's a great question. That's a great question. Can you? I don't know. Can you? All right. I have 13 questions starred from Rudes. Thank you so much. Are we still using heat map levels as exit points from Aussie Ian? So this is one that I proposed to Scott yesterday. As of this morning, he hasn't been able to run that yet. He says that's going to take 50 runs on his computer. I was like, give me context. I don't know if that's a lot or a little. And he said, not too much, but it's going to take a while. So as of right now, the answer is maybe, maybe not. Very honestly, truthfully, we're pretty much nailed down on entry signals. There was one question, if we're going to use the 5 EMA crossover or the 10 EMA crossover on breadth. I don't think Scott ran that. I think he just ran everything on the 10. So he's going to go back and run everything on the 5 and the 10 to confirm if the 10 really is better than the 5 on the breadth crossover. But this is the best part of it, right? We're taking the Outlier data, and we, as part of the Outlier team, are building up a trading strategy to use the Outlier data to make Master of the Universe money, right? This is so exciting to me, because if I win, you win, we all win together. That's the best part about Outlier. We should probably have some sort of thing like that, where it's like not just save time, make money, and start winning with less risk, but also we all win together. I kind of like that idea. Kind of like that idea. Lukem Nukem. If you were up bigly in a trade at the beginning of the day, past your 2 ATR, I assume like the rolling point, would you want to roll it so you can take a big credit and stay in the trade? Thank you. Makes sense, doesn't it? Dude, it makes tons of sense. You can roll at any point in time. Any point in time. Let's pull up a chart just for funsies. I know Joe is in this one. Joe was telling us yesterday. Isn't it so fun to have Joe around? I think, first off, Joe is not being paid to come. He's coming because he just enjoys hanging out and talking to the Outliers. I love having Joe on. It is so much more fun than just talking to myself on the internet. It really, really is. But let's say, for example, Joe bought here, and we're just using examples. I don't know what Joe did, and I'm really happy for him. And he's got a 1 ATR, and let's say he's got a 2 ATR up here, right? I mean, honestly, you can roll at any point in time. Rolling is one of the biggest voodoo tricks that I ever learned, and I learned it from a guy named Mike Coe. And Mike Coe, there used to be a show on Options Action on CNBC that he was on regularly. And he and I got into a Twitter argument one day about like how what he was talking about was stupid. And he's like, well, yeah, why don't you come down to Austin and let's talk about it? And I was like, deal, I'll be down there. I'll see you there. So we set up a meeting. We met at a Starbucks, and he rolls up in his BMW, comes in, and we start talking and stuff. And this was one of the things that he talked about was rolling options and how it allows you to keep the trade on, take partial profits now, and frees up capital to keep trading. But also by the end of it, Mike Coe said, hey, you know what? Don't start a podcast. Don't do it. Nobody's going to listen to it anyway. Nobody cares. And first off, I was like, screw you. I'm going to start this podcast. Within 7 months, it was in the top 10 of the iTunes investing podcast. So thanks so much, but also not thanks so much. Either way, as far as the rolling goes, yeah, dude, you can roll any time of the day. If that suits you, by all means, do it. It just makes it easier lifestyle wise if you have a time of day to trade. I'm very much a lifestyle design kind of person, right? I don't want to be stuck on my screen all day. I want to be going to the gym, taking my kids to and from soccer practice and school and stuff like that. I want to go touch grass, right? There's all kinds of things I want to do in a day. And one of those things is not being stuck in front of a monitor for, 6.5 hours a day during the trading day. But you do you, boo. Brandon, I think that's a great idea. I think it's a great idea. Um, let's see. Arnand, why don't you ask people to hit the like button? That was not the question I expected to see. Damn it, hit the like button already, people. God, I can't believe you. Look at me. If you have not hit the like button already, you are doing something wrong. It's okay. I don't ask anything in return, my friend. I just want to make money. I just want to make money with you, not from you. I think that's very obvious. When do you think you'll start trading with version 4? That's a great question. First, there's no rush, right? I don't want you to ever feel like you need to rush to trading. So Scott is running all these back tests. We've pretty much got I thought we had entries nailed down. We have one more test to run, and then we've got entries nailed down. I would say we're 70% there on exits. Once we've got entries and exits, then we're going to work on position sizing, which we had some really great conversations about position sizing yesterday. Scott threw an idea at me about how many ATRs to the 10 EMA, and it blew my mind. And I'm like, Scott, you're going to have to explain this in itty bitty baby boy terms so I can understand what you're saying here. So that's step 3. But then if we've got entries, we've got exits, and we've got our position sizing nailed down, we should be ready to roll at any point after that. But of course, we don't need to rush it, right? We don't need to rush it. Once we get all that nailed down, one thing that I want to do is live backtest with you the export of the trades, and that'll be a lot of fun. I'm actually looking forward to that. So probably sometime mid next week, I'll be able to have the export, and we'll do the live backtesting with you. And we'll be using the replay feature in TradingView. This is really, really cool. So for example, these are some of the tests that some of the yeah, here we go. Some of the signals that I've been backtesting with Scott. So we could do a replay, right? And we can start it here. And we can say, okay, when we get the entry signal, take the trade, right? So we can be like, okay, that's the entry signal right there. And then we can watch it day after day. We're making sure we understand the plan. And then when it gets to the sell position, right here, we take our profits and we can see what that's like. This replay feature is so cool. It is so cool, right? Because you can actually see it passing day by day by day, have your plan in place, and then see what it looks like to execute it in right there on the screen. So I'm very excited about that. That will be something we're doing. Rick says, with the new system, do you expect losers to be randomly distributed? Yes. Why wouldn't they be, Rick? Right? That's how wins and losses come, right? We can't determine. Hang on. I think I have something I could show you. Can't give away the farm here, but I can probably show you something. Yeah, this will do. Hold on. Mahesh said we're not allowed to show everything, so I'll show something. All right. So this is the latest export that Scott sent over to me. Wins and losses are randomly distributed, right? There are win streaks, there are losing streaks, right? Wins and losses will always be randomly distributed. Right, we can see right there, wins and losses being randomly distributed. So the answer is yes. And of course, if I could say I only want the wins, I would do that. Will we need a new song? Yes. Y'all haven't sent me any new songs in a minute. I love the songs. None of these songs I asked for. People sent me songs out of their own accord, and it's so much fun. It's so cool. It's so cool. Chuck, yes, today is Sell Escov Day. Today is wait, other than a buzzing mic, yeah, other than the buzzing mic on what's his face over there, on Joe. Chuck says, Chris, is today Sell Escov Day? It 100% is Sell Escov Day. And that's fine. We'll buy it back on Tuesday. Honestly, Ian, if you're in a trade at expiration, does it pay out at the option price at the close of that day? Okay, great question. So on Wednesdays, put ratio short spread. On Wednesdays, options deep dive, we watched a video that this guy was talking about how, actually, this is a better picture. We watched a video about how this guy was talking about, no, that's still not the best picture. Hold tight. We watched this video and a guy was talking about how this is better off. This is better off than just selling puts outright. Open image in new tab, which, oh, that's a shitty image. Hang on. I have a plan here. Just hold tight. Let me find what I'm looking for. Will this one do it? Let's see. Open image in new tab. No, I don't want to save the image. I want to open it in new tab. Open image in new tab. What the hell? Why is it downloading that? Sorry. All right, we're just gonna go with the first image. Back over here. Open image in new tab. All right, so looking at this, let me take a little screenshot. And okay, before expiration, it's going to look something like this. It's going to look something like this, right? Now, each day that goes by, this line is going to get closer and closer and closer to what the options profit and loss looks like. Now, this is if you're selling options. I do not recommend that. If this is the current price, right, the closer or the farther out it gets, the closer this gets to your maximum price. But you will not achieve this sort of profit shape until the day of expiration. Now, the reason that this is a better idea than selling short puts is because the short put looks like this, right? Where you're going to receive a certain amount and that is capped. I don't know why that line is wavy, but it's capped at expiration, right? And every day that goes by, and this is why I hate selling options, that every day that goes by, in theory, it needs to be getting closer and closer and closer to that point. The issue is that, let's say that you are in a downtrend and you're like, oh no, I've got 3 weeks for it to work out. I've got 3 weeks, it'll be fine. And you know, as those 3 weeks are coming, you're just watching the price go down and down and down against you, against you, against you. And this is exactly where Chris went wrong. But you're never going to get that peak on the price until the day of expiration. It will not happen. Trust me, I remember specifically, I had this trade set up on my account and I'm watching it and I'm like, you know, surely a couple days before it'll start moving up like this. No, it doesn't. It is still moving up in a linear fashion, a little bit more each day, a little bit more each day. And then finally, on the day of expiration, within the last few hours of expiration, will it actually find itself somewhere along that profit curve. So I am not a huge fan of selling options at all. But obviously Ian knows that. So if you're in a trade at expiration, does it pay out at the option price at the close of that day? So I'm not 100% sure what obviously Ian is asking about that. But with a long put, I have a slight humming when I speak. I can't do anything about it. I can't do anything about it. It is what it is. There is somebody mowing the yard outside, but I can't do anything about that either. But to that point, the long put, right? If we were to hold it until expiration, each day that we get closer to expiration, it's going to pull that theta decay down. But we don't hold it like that. We don't hold it like that. But if you are holding it on the final day of expiration, it's going to lie somewhere on this path. It'll lie somewhere on this path. Okay, let's go to the next question. Shane, Chris, is it a negative looking at tech rather than full stocks when looking at a tech stock? So what does one represent over the other? Is it a negative looking at tech, I guess the sector, than at full stocks when looking at tech stock? I'm sorry, Shane. I don't understand the question. You really want to be able to make sure that you are um, setting everything you can in your direction, with the market turning in your direction, the sector turning in your direction, and then lastly the stock, right? Moving down, right, from a top-down approach. Do you think that you'll hold through earnings in the future? No, not at all. In fact, we just had some data yesterday. Let me find it real quick, that showed exiting at earnings to be significantly huge, like unbelievably huge with our 4.0 backtesting. Hold tight. I have it on here in the Discord somewhere. Scott was so stoked when I found this. Wait for it. Wait for it. Wait for it. Almost there. There. So if your stop is hit, the expectancy is negative 1.12. If you sold, now this is using the 4.0 signals, using the plan that we're working on backtesting so thoroughly. If your stop is hit, the expectancy is negative 1.12. If you're selling on just the sell signal for no other reason than the sell signal, the expectancy is 7.09. It's unbelievable how high the sell signal is. In fact, the sell signal is pretty much the best thing we have tested so far. And then if you're selling or closing because of earnings, closing the day before earnings, the expectancy is 4.35. It's bonkers high. It's bonkers high. So you're keeping your losses really small and letting your winners run out of control. How cool is that? I'm very excited. What is the best taco joint in Texas? I don't know if these are everywhere, but Torchy's tacos, holy moly, I love me some Torchy tacos. How will Outlier 9 work in a bear market? So great question. All of these signals are built for a bull market. They're all long only signals. There's no short signals. At some point, Mahesh and Mark have said that they want to work on short signals. So Outlier 9 in theory would be flipped on its head for short signals. But honestly, right now, until they pull out the short signals, and I don't know when that's going to be, I'm just not going to even worry about it. I'm just going to sit in cash and not F up. I'm just going to sit in cash and not F up. What is the range of the Outlier channels? So it goes from +4 to -4. +4 means two Outlier channels on the market. Let's talk about what an Outlier channel is. So on this date, there was a score of 2 because the market had more uptrends, less downtrends, and then you could go into whatever sector you wanted. And on that date, were there more uptrends and less downtrends? So if you have more uptrends on the market, less downtrends on the market, that's a score of 2. If you have the same in the sector, that's a score of 4, right? And then we did test this yesterday, not using any sort of Outlier channel, donkey channel exit. How is Lucy? I don't know. I hadn't seen Lucy in a couple of weeks. Brian asks, can we expect a snapback on the market with fear and greed around 75? Well, Brian, we can't ever expect a snapback, right? We have to make sure that we listen to what the market's telling us. And we don't know. We don't know, right? But one thing that we have found, and it's very, very, very true, is that when the fear and greed level gets elevated, there are potentials for snapbacks, right? We've seen it time and time again. Now, you can see the fear and greed coming down while price is going up. That can totally happen, right? And you can also see the fear and greed going up as the price is going up, right? The issue that you run into is if everybody's in the market, if everybody's greedy, what's left? There's nobody else to get more greedy. There's nobody else to help push prices up higher. People are more likely going to start to turn fearful because they're going to lose their money. So that's the concept behind it, and we have seen it time and time and time again, where when it breaks, it can break really hard and fast. Let's look at a couple different examples. Let's go like AMD. By the way, how cool is it to see Outlier 9 right there? Man, is that nice. Man, is that nice. Now, I wanted to pull up AMD because it has gone through this huge run of getting more and more and more greedy. The greed peaked on August 5th. Let's go to AMD's chart. Did I delete AMD? I must have deleted AMD on accident. I always have AMD over here. AMD. Add AMD to this. Oh, weird. I didn't mean to. And then let's sort by symbol. Here we go. Okay, AMD. August 5th. That's when it peaked. Now, looking at this chart and looking at this right here, we can see that the price has gone sideways to slightly down, but the greed has gone from around 89, max score of 100, all the way down to 75 right now and falling fast. So that doesn't give me warms and fuzzies. In fact, that would give Chris a lot of concern, because if people are getting more fearful, less greedy, you're going to have less people to help push up the price. It's just a fact. That's just how it works. Oh, there's Scott right there. Would you prioritize capital efficiency over signal outcome, as it shows how the signals outperform the underlying in the past? Scott, I think we need to test that, dude. I think that's exactly something we need to add to our test. By the way, everybody say hi to Scott. Scott is the Robin to my Batman. Scott is awesome. I am so grateful that Scott is part of our crew right now. Let me type in Scott real quick. Scott. Yes, there are negative scores on donkey channels, and let's go over to that real quick. So a negative score is when it's pushing down. You can see, actually, if you look right to the left of my cursor, as it starts to push down, this shows an OC of -2. So that's when it's getting less uptrends, more downtrends. Yes, great question. Oh, okay. Can you explain why sometimes the price of a stock will rise and the price of the option falls? So let me log into Trader real quick. Are y'all enjoying this, by the way? If you are enjoying this, smash the like button. There you go. I don't remember who said I need to say hit the like button earlier, but if you're enjoying this, do me a favor and hit the like button. Oh, you could start trading today, John Joseph. I'm still building up my trading plan, thanks to Scott helping me out with all this back testing. And man, so much has changed. So much has changed in my trading plan. In fact, we have 5x'd. I couldn't believe this. When Scott told me the golden ticket trading strategy had a expectancy of 20 basis points, which last year my outcome for the year, my outcome, which is expectancy times frequency using leverage, was 91.37% in 2024. 2025, I'm up about 15% because we hit a couple ugly losing streaks. But the year is not over yet. The year is not over yet. And we have 5x. I could not believe when he told me at where we are right now, enacting the plan is 5 times higher expectancy than what I had been using previously. Bro, give me a break. This is awesome. I can't wait for this. Okay, so let's look. I didn't choose this one on purpose. Let's look at new to get back to Salty Brad's question here. Salty Brad, one of the Outlier University graduates. Can you explain why the price of a stock will rise and the price of the option falls? So, great question. The reason that happens is, remember, intrinsic value is directly correlated to the strike price and the price of the stock. So the way that you calculate intrinsic value, and we'll go to the 13s here, is you take the current price, 1477, minus the strike price, and that gives you exactly intrinsic value. It's almost like I know what I'm talking about. What you're seeing fall is the extrinsic value, because that would be an impossibility, a mathematical impossibility for the intrinsic value to go down as the price of the option goes up. So the only thing that can change is your extrinsic value. Now, your extrinsic value, that is the uncertainty value of your option. That's going to factor in things like vega, which is your volatility. That's going to factor in things like theta, which is your time decay, rho, which is changes in interest rates, which mean really absolutely nothing in your actual trading plan. But that's what's built into here. So if you're seeing it fall over time, you're probably having accelerated time decay as it's getting closer to expiration. And you're probably seeing accelerated vega decay meaning less implied volatility as it gets closer to expiration. So that's exactly what you're seeing there. It's all extrinsic based. It cannot mathematically be intrinsic based. Great question. So I love this. We don't have anything landed on stop losses yet. We'll get there. Don't worry, Daryl. How often do swing trades happen versus active trading? Good question. I saw another question about what's the difference in swing and active trades. So here, this is active signals. Now this is new in Outlier 4.0. In fact, Mahesh approached me with the swing trades and he's like, Chris, check out these new signals. And I was like, Mahesh, what the heck, bro? I can't trade these. And he's like, why not? And I specifically looked at Hood as an example because I made so much money in Hood in May. And he was like, what do you mean these aren't any good? And I'm like, bro, the entirety of the move that I had in May, which happened like right here, wouldn't have been part of my plan. I wouldn't have been able to trade it because like the buy signal happened weeks before that in April. And so Mahesh was like, okay, and and I'm like, you can't just, in fact, let's go. So this is active signals right here. Let's go to swing signals. And when you change it, it applies to everything globally. And hold tight, let's load it in here. So the active signals are a lot more frequent. The swing signals are a lot longer in duration. I'm curious if this says average holding period 12 days. And if I go back to active, I don't know if this updates right there. I'm just curious. Average holding period 21 days. Oh, that's interesting. The active signals are actually longer than the swing signals. Who would have thought? I wouldn't have thought that. Either way, that's what the difference is that active has more signals than swing, and for some reason on Robinhood they seem to be slightly backwards, and that's okay. Let's see. Okay, Mike. Normally we have stock buy signal away from the 10 EMA, but Outlier 4.0 can get closer to the 10 EMA. So the buy and sell signals are not due to moving averages, right? Any sort. I just noticed I got some junk on my jacket here. I'll get that off. Dust those haters off. The buy and sell signals happen independent of moving averages. And moving averages give us some information, but they don't generate the buy and sell signals. I can't seem to get VacLab's bookmarks to work in 4.0. You're gonna have to ask VacLab about that. Because it's not an official code from Outlier, I can't give any support on that. Eric says, can I pay you 82 cents a day to get the best stock data per day? That would be fantastic. It really would be, right? You can actually get the Outlier annual pass for only 82 cents a day. If you're on the monthly plan, you can upgrade and save 64% off the regular monthly price just with one click. Yeah. And that'll get you, not only will that get you into the Outlier software, but it'll also get you into our invitation only live streams in the afternoon where I put on live trades. I'm very excited about that. Does Joe have a real job? I don't know. You're gonna have to ask Joe about that. Is it useful to learn coding for backtesting? I don't know any coding. I really don't. The way that I've done backtesting in the past, and I've shown it on live streams before, is manual AF. Just, did it line up here? Yes. Cool. Well, if I put on the trade here, what was my outcome? Okay. Outcome was X, Y, or Z. Keep track. Do it again. So no, you don't have to know coding to backtest. I've not known coding and I've done 16 years of trading. So that's up to you. Does coding make it easier? It can, if you have data to be coded, right? If not, then it really doesn't help. Trav says, would it be possible to get 80 Delta shirt for merch ideas? I love that idea. I love that idea. When live trading, the afternoon live streams are invitation only. The invitations go out in our Discord as well as in our daily emails. So the way that you get access to that is just by signing up at outlier.com. Let's see. Can you please explain all your entries setups? Later. Trust me, I will. Trust me, I will. How does the VIX measure volatility? From what I understand, and I could be wrong, and so that's why I'm prefacing this and saying this, VIX measures the amount of put buying activity that's going on. When people get scared, they go out and buy puts. When the number of puts starts going up higher, VIX starts going up higher. Now, could I be wrong in that? I could. That may be more of a ChatGPT question, but that's what I understand it to be. Tutorials will be coming. I am the one who has to record those, so I have not got to that point yet. It just came out yesterday. Give me a break. A lot of stocks are missing. So we cover 2,600 stocks. If it's not a stock that we cover, maybe suggest looking at a different stock. Mahesh did tell me he's planning to onboard several hundred more in the near future, maybe within a couple of weeks or so. I don't have what that list will be, but also he said at some point, probably this year, we'll have every stock in Outlier, but it won't have the buy and sell signals. The buy and sell signals need a certain amount of data, back tested data, in order to push those through. And not every stock is going to have enough data, obviously, to do that. So more are coming, and even more are coming after that. Phil, I'm not a trader. I'm an investor. How can I protect against downward spikes when I set stop losses? Had occasions when the price rapidly dips below my stop loss and then immediately bounces back up. Bro, Phil, the answer to that is stop putting stop losses in the market. I know. This guy sounds crazy. What does this guy know? Right? I had that so many times happen. It sounds like you have too, where the wick of the candle comes and takes out your stop loss and then goes back up, right? Let's look on AMD as an example. Imagine you had your stop loss set here, right? Wicks back down, immediately comes back up, and then goes up without you. That super sucks. You know how you get around that? A, don't set anything in the market. B, only trade at the end of the day, right? Because I don't care if this happened at 11:32 or 10:57 or 9:45. It doesn't matter to me what time that happened. All that matters is closing price. That is how I get around that. It's a good question though. Let's see. All of this new data is on stocks. Everything that we're doing is on stocks. Now, here's the deal, is that stocks and options are one and the same, right? There are obviously nuances with options, especially like the leverage that you can get with it. But I've seen this question before many times. It's like, oh, Chris, well, I don't trade options and I can't use Outlier. Of course you can. Everything has to do with the price of the stock. The only thing that changes is the pricing of the option, as we talked about earlier, is directly correlated on the intrinsic value, which is what we're trying to maximize anyway when we look to trade. So everything we do can be done on stocks. Everything we do can be done on options. And I don't want anybody to have an excuse to say, well, I don't trade options, I don't need Outlier. I don't trade stocks, so I don't need Outlier. No. Use it on both. Use it on both. Let's see. I'm going to take one more question, then I'm going to get out of here. Mr. Dave says, are you still exiting on fear and greed heat map scores? I mentioned this earlier. Scott is actively working on testing those. I don't know when that's going to happen. Scott's having some computer issues today, so it may be Tuesday. Don't forget, Monday, the market's closed. Maybe Tuesday before I get that answer. I'll do one more. Yes, Morgie. There will be an Outlier beta class. There will be. Right now, we're not ready for it because we want to get Outlier 4.0 set up. But there will be another class. There will be a beta class coming soon. So I'm very excited about that beta class, and hopefully you and everybody else will be tuning in as well. Right? The principles that we teach in Outlier University are timeless, but the intricacies may have some slight differences from alpha to beta class. But overall, the principles are always going to be there. They always remain timeless. And you know what always should happen? If you're ready to save time, make money, and start winning with less risk, click one of these two videos, and we will talk soon.